Hey guys and gals, I want to welcome you to Boomer TV and the Video Game Factory. I'm Andy Asher. What we have all been asking about is what will the new normal be like? What will it be like and what will the financial world be like? We have known as it's been for so many years. What will it be like saving money for the future? And that's one that really sticks with me. After all, some interest rates are hovering around zero. There's talk that a big legacy retailers like Neiman Marcus and Penny's may not even be around. Amazon is changing our world. The answer to all of this range from some uncertainty. So we turn to Southern California financial consultant Steve Sexton for some straight talk about it. We'll talk to Steve in just a moment. Now, a lot of you are probably first timers to our show, so I need to explain what's going on here. The Video Game Factory, part of Boomer TV, is about how I have become consumed by video games and the range of experiences and emotions and excitement they provide. So, we made it part of the show, and it's been really fun noodling around games while talking to our amazing guests. Now, I'm returning to my favorite action game, Battle Royale. You can learn more about our upcoming shows in our newsletter or connect with us on Facebook, YouTube, Twitter, Twitch, and at Boomer, where we live stream everything. Like and follow us to hear more about what's coming up. And in the meantime, let's get started right after this. And remember, I love marmalade. Well, Steve Sexton, thanks so much for being here.
Thanks for having me, Andy.
So what's it like for a financial advisor during COVID-19?
Well, most of my staff's not in the office, just me. Everybody else.
That's a big difference.
Oh yeah, it's a little different, a lot quieter, and we see all of our clients through Zoom, and most of the meetings I have are through Zoom as well. So.
Yeah, that definitely changes things. So this must change the kind of advice that you share with your clients. What I mean is financial advisors like to help people build their nest egg, and it seems that you have to help people maybe hold on to it. What's that like?
Well, you know what? Yes, it all depends on what stage somebody is in retirement. If the proper planning has been done, and somebody has a diversified portfolio. And that means multiple asset classes over things that have no risk, things that have risk, liquidity, and so on. Then they're probably going to be okay. They might have a few adjustments to make, but they're probably going to be okay. The big issue is really going to come when people are going to begin to retire or thinking about retiring, because they have issues that in the next 5 to 10 years, we're likely going to see our taxes go up. So people have to think, hey, look, if I am in a 10% bracket right now, what if I'm in a 20% bracket in the next 5 to 10 years? Because, hey, we've got a heck of a lot of debt. I mean, September last year, the national debt was only $22.7 trillion, and it's already over $25 trillion. Plus, here in California, I mean, they have a $54 billion shortage on their budget. So where are they going to get that money? How are they going to move forward? So we're likely to see taxes move forward. So the big advice that I'm giving people now is to really take a look at those taxes and how do you slowly get to a point where you're almost paying no taxes with your retirement assets, which would enable you to retain more assets because you're paying less to the government, and you're not as susceptible to future tax increases.
I get you. What does it feel like to you knowing or not knowing all the many business changes ahead?
Well, you know what? That's part of the fun part of this game, because it's always changing. There's going to be new tax codes. There's going to be new rules. You know what? In the last 7 months, we've seen over 219 CEOs from major companies like Disney, Salesforce, MasterCard, T-Mobile. They all resigned because they understand that the economy is overstimulated. It needed to take a break. and they didn't want to be part of the downturn. So we're seeing companies right now like Starbucks just announced that they're going to close 400 stores. A lot of people don't realize that equates to about 14,000 people. And what is it? 24-hour fitness. They filed bankruptcy. You heard J.C. Penney's. Many of them are restructuring because they were on the tier of having issues, but now those issues has been exacerbated by the shutdown of COVID-19, and obviously protest, things like that. So we really have to have good, sound money management with our clients, or people need to be looking at moving forward. Like I said before, diversification is a very important part of that.
Yes, indeed. And I think that we talked about this a little bit, but how the coronavirus can, impact my retirement.
Well, one of the things that we're seeing with all these layoffs, even though one of the things we're seeing with these layoffs is the fact that some companies are actually doing what I call a salary dump. And we saw this in late 2008 and 2009, where they started cutting levels of management. So imagine you're a company that has 15,000 employees and you have a level of management that might be as much as 100 people that are all making $250,000 a year. And they go through and start laying those people off because it saves them a tremendous amount of money. We're seeing that in areas. And for those people in their mid 50s, it's a little bit harder to find a job in the same salary range. So they might look at it and say, hey, what's going to happen to my retirement? And that's one of the reasons why 70% of people feel like it's going to be a lot harder to retire moving forward. So those people are going to have to look at, how do I generate new money? Do I go and buy a franchise, start a business on my own, consult? Do I go find another job, which is likely going to have a lower salary than what I have now? So those are some of the big issues that people are going to be dealing with moving forward.
And how can baby boomers protect themselves from, there's a lot of shady characters, aren't there, out there?
Yes, there is. We are seeing some scams where people are representing themselves as FDIC or the SBA, Small Business Administration, IRS, what have you. There was a group that was going around saying they were the FDIC, saying they can get safer, safe investments with higher rates of return that you get in the stock market. The thing that people need to know is no government agency like the FDIC, IRS, Social Security, or Small Business Administration is going to reach out to you. They do everything through snail mail. And if it's the Small Business Administration, they typically work through banks. So the bank's going to be contacting you on behalf of the Small Business Administration. So it's important to know those things and not fall for them. The other thing is, when it comes to taxes are going to be coming due here mid-July. It's very important that if you don't have a tax person, find somebody that's reputable. Make sure they have a taxpayer ID number. If they don't utilize them, because they haven't got the license from the federal government to file your taxes. Things like that are important. You're still going to get the Social Security fake phone calls. Obviously, just hang up or report them to the FCC. Also, with the credit cards, be very mindful that there's a lot of things that are going online. And when I mean online is they'll send you something saying, hey, please update this or please update that. And all they've got is a mask of say it's Chase, of their logo and stuff like that. You're better off calling the credit card company to update whatever you need to update. It's just safer.
Good advice. What about folks retiring soon, but recently got laid off? You mentioned those layoffs earlier.
Okay. The big thing is this. If you can retire without your current salary, that's great. And I actually am getting a number of people walking to my office with that very same question. The important thing is to make sure you can afford things with, future expenses like remodeling the house, buying new cars, handling those health issues that might come forward. So you really want to sit down with somebody and really do a financial analysis or retirement analysis on best time to take Social Security, how you're going to go about distributing your income in a tax efficient way, which means you really want to look at having a diversified you want to be just as diversified from a tax allocation as you want as from an investment allocation, if that makes sense. So you want to look at all that, make sure you have the ability to have the money you need to live the life you need, also to make sure that you only really need to obtain a reasonable rate of return. So if you're in your mid to late 50s and you need a 9, 10, 11% rate of return, you might need to work a few more years. But the important thing is to sit down with somebody right now, figure out what you need to do mathematically to get to a point where you can retire. So that's the best recommendation that I would make at this point with all the craziness that's going on.
Yeah, and you did mention Social Security benefits become an important decision. How should someone decide on how to elect benefits that best suit their lifestyle?
Oh, that is a question in the context of retirement. But when you're looking at Social Security, there's multiple other factors than just how long you think you're going to live, such as if you're married. You know what? Your spouse might be entitled to a spousal benefit if her Social Security benefit is less than 50% of yours at full retirement. In addition to that, if you're married and you have an 8 to 10 year gap or more between ages, you might really want to take a look at when the older person actually takes their Social Security, because it will have an effect on the younger person's longevity of assets. And other things, such as people right now, if they retire early and say they're 62 and they're getting Social Security, they need to work. They can only make $18,460 right now. For every $2 they make over that, they'll lose $1 in Social Security. So it's really important to understand those little things that make a difference. In addition to that, how's the Social Security taxed? You look at those 5 or 6 things that you really need to consider about Social Security, and then you say, okay, how does my personal assets complement my Social Security income? Does that make sense, Andy?
Yeah, it does. And that also brings me a little bit to taxes and how they come into play here. Because what tax strategies would boomers be using, or what would be the best advice?
Okay, so let's talk about that. Taxes, you know what, we are likely to see a tax increase. How that goes, I don't know. But if you take a look at things that go along with taxes, for example, people get dividends. You can get ordinary dividends or you can get qualified dividends. If you have qualified dividends, they have the same tax treatment as capital gains, meaning if you're in a 10 or 12% tax bracket, you're not going to pay taxes on those qualified dividends as well as those capital gains. So for example, if you have an $80,000 a year income, 35 of it being Social Security, 20 of it, let's say, is qualified dividends, and 25 is capital gains, you're at $80,000. In a situation like that, in my state of California, and I just did this for somebody, their taxes would be $26, and those would be state taxes, no federal. But if they had ordinary dividends and the same Social Security and capital gains, they'd be paying about $2,000 in taxes. So it makes it a little bit exciting.
Yeah.
Well, let me take this another step and show somebody what's possible. I had a client 7 years ago, that would have been taking distributions from an IRA, a real estate investment trust, their Social Security, capital gains, and dividends, about $120,000 in income. Back 7 years ago, taxes were about $15,000 a year, which means he'd net $105,000. Now, over the next 7 years, actually over the next 5 years, instead of making contributions to his IRA, he made contributions to a life insurance policy. He also started working on converting part of his IRA to a Roth. And we started moving over those ordinary dividends to qualified dividends. Now, we just met last week. He's got $120,000 income, and his taxes are $346, and that gets paid to the state of California. So you could put steps in place slowly but surely to reduce and eliminate taxes. So if taxes were to go up, hey, it's not going to make a big effect on you, which means you'll have more money for emergencies, to do the things you want. You can leave a larger legacy to the ones you love and care about, things like that.
Yeah. Good advice. And where can somebody learn more about it and about you?
Well, they can go to info at Sexton Advisory Group, or they can just go to info at Sexton Advisory Group, or give us a ring at 1-800-560-2611.
That's great information, Steve. I really appreciate your time, and it's a big help.
Thank you for having me, Andy. It's been an honor.
Well, that's Steve Sexton, and you can watch the replay on Facebook, and it's also on YouTube and on bloomerboomer.com. So until next time, so long. And remember, I love marmalade.